All right, welcome everyone. Welcome to the Hurley Investments commentary for the 23rd, Monday, the 23rd of February. If you have any questions, please go to info@hurleyinvestments.com. Send us an email. We'd love to get in touch with you, help you with your questions that you have as you are listening to these recordings. Obviously, you can reach us at 888-287-1030. Brian Strain, Keith Bybee, Kevin Hurley, and Nate on those on the what do you call it? On the telephone tree pretty soon here. But okay, let's talk about the market. And I don't know how many times I've told you guys this, but stock markets tick higher after AI disruption and tariffs. Can someone tell me, what do you think disrupted the market today? Is it AI disruption or is it tariffs? Someone tell me, what really disrupted the markets today? Someone said, I heard tariffs. Tariffs, uncertainty on the tariffs. Anyone else? Do you think it was AI disruptions today or the tariffs? Stuart says it's AI. So Stuart, give me the idea why on the AI. Maud says both. Maud's covering all of her bases. If you were to ask me, I would have told you it was tariffs. Now, there were some reports of slowdown. There are also some reports today over AI now doing two things, but now next then formulas. But we knew that last week. Can fix programming, but we knew that last week. The one change was it can find, I'm going to call it problems in programming, which was a big issue for like cybersecurity. I mean, that's kind of the big push is cybersecurity issues. And then the last little part of AI that I heard of, I don't know if I agree with it. But again, I'll admit, obviously, I don't know everything. The security tool, questions put this way. The security tools can disrupt current AI computer models. I know I'm not typing, it actually gets caught behind my version of GoToWebinar. So, did that justify the market today being down over 1%? Or does the fear of equal tariffs, trade deals, trade balances, move our markets lower. So here we go. I've got like 24 people here today. If you are going to believe AI or tariffs, right now, give me a vote. Tell me, is it tariffs or AI disruption that's moving our markets lower? And I'm just going to count them as they come up. 1 for tariffs, 2 for tariffs, 1 for AI, 3 for tariffs, 4 for tariffs, 5 for tariffs, 6 for tariffs, 7 for tariffs, 1 is both. Nathan Roberts said both. That's cheating. But I'll give 1 to AI. 9 for tariff. 10 for tariffs. 1, John, I think that's AI. So we got 10 tariffs, we got 3 AI. So that's interesting. So let's go through both of them all together then. If it's tariffs, that is the disruption. Didn't we go through this last year? Didn't we go through the tariffs last year? And if it's tariffs that's a disruption, I would think this is going to equal a great buying opportunity. Now, if I'm going to pull up a chart, I might look at the NASDAQ composite and think we're probably going down to, well, it's kind of funny. I don't even know I'm looking at this one. I've got it for you. If I was looking at this, I would think NASDAQ is bearish. We're probably going to hit the 21,900 mark, which is about 1,630 points down. So I'm thinking, okay, we've got another 6% down on the NASDAQ. S&P looks significantly different. 68.37 to 65.35. 300, we got about 5% down there. The Dow looks kind of, well, looks significantly different, right? 48,800 down to 57,500. That has like a 20% drop down. We'd have some worries or concerns. Buying opportunity, I don't think you pay much attention to the Dow. Buying opportunity, if the S&P 500 gets down to 6,600 to 65.35, buying opportunity at 2,100, 21,900 on the NASDAQ. We've been through this before. If it's an AI problem, there are 3 of you that said AI would be the problem. Is it a great buying opportunity? And this counts for Nathan. I'm going to hold you accountable. Nathan, you said both. And we've got two Nathans in here today. If it's an AI problem, is it a great buying opportunity, or do we have something worse? Worse. James, I'm very curious to know your thought on it. So no, in fact, I'm just going to copy it right across. James is one of our newer people that's in here. Great buying opportunity. No. Nathan, any thoughts? I'll be honest with you. I would think if, and I'm not agreeing it's an AI problem, I would think if AI problem, huge downside drop in the markets. And I would quantify it at 35% drop, doing nothing more than taking the 70% gain we had in the last 3 years and doing nothing more than doing a Fibonacci Elliott wave 50% retracement, which means we'd have about a 35% drop in our markets. Nathan gave us a tentative and cautious investing. I forgot who the third person was that voted yes for AI, but if you see something here, Jonathan, that's a great comment. If you see something here, it'll be very interesting, because some of you made the comment about talking mistakes. And let me just make a quick helper understanding to the emails that came across. You make your best educated decision with the information you have at that exact second. Which means, and this is what's gonna kind of blow some people away here, right? Which means, come on. A second later, you might have new information that changes the equation. I always use math. Hurley investments. We call our trade. Protective put. We do covered calls. We do just stock. We do double or triple protective puts on stocks. We delete bull calls that adjust to straight bull calls. Simple question, why? because we know we can be wrong. And there's a very simple point to this. When you collar trade and you're wrong, you're actively doing something on the way down to increase or give you an explosive return on the way back up. But we realize we can't be wrong. Great question. And you guys can all answer this. Do we sell puts? What's your expectation if you're selling a put? Your obligation to buy the stock at a certain price for a certain period of time. Someone said earnings mainly. Okay. But what's your expectation of the stock? Sell a put. So a short put, obligation to buy the stock. It's a credit trade. And your expectation is a bullish movement upward, usually done by earnings or a continuation trend, right? Anyone agree or disagree or think of that? So here's my do we sell puts? I see a couple agrees there, right? Do we sell puts? Hardly ever, because we want to make hundreds of dollars on stock ownership, not just a credit. And so here's the interesting part of it. Market will stay or go up, make money. Agreed. If you want the market to stay or go up and you want to make money, we choose to make dollars, lots of dollars on stock movements going up. We don't want to be stuck with just a credit. If the market goes down, I get a better price. I disagree with you. You get a credit, not even a very good credit. Usually on a 30-day credit trade, you're not making even 1%. But if you're making 2%, I wouldn't want to buy in at a higher price, getting a stock 2% lower when you're going to start your trade maybe being down 8, 10, or 12%. We typically are looking for big movements, $10, $15, $20 movements on stocks that happen at earnings. If you're looking for something like Deere or Caterpillar, something that doesn't move as much at earnings, you get even less of a credit. And by making small credit, it doesn't have that potential, just doesn't have that potential for the explosive movement up or down. You're stuck with just a credit. Can you adjust it? Can you get more credits? 100%. Won't argue with you. but you won't make a 40% return on a portfolio credit trading. The numbers just don't add up. Could we add a long put if the stock falls below the short put price? Definitely, 100%. But what we've been doing at Hurley Investments, and it's kind of fun. We've been invested in the Magnificent Seven. And we don't think the Magnificent Seven is done yet. Have we invested in all of them? No. Amazon, Tesla are not part of the Magnificent Seven that are fundamentally sound. They're just not. So we haven't invested in them. Netflix is very poorly run and is becoming less fundamentally sound. So we haven't been investing in Netflix. We have been in Google, we have been in Apple. Microsoft has been somewhat volatile. We have been in Baidu in the past. We've been in Micron and Nvidia, subsectors that are now part of the AI craze or push. So that's where we push our returns. And Jonathan and James, we'd love to go over some of last year's trades. For each of you, don't hesitate to reach out to Brian or to reach out to me. This week, Nvidia. Tomorrow. I'm going to make just a simple comment. I'm going to ask you guys, what do we know about Nvidia? Which is actually the same as Micron. Earnings are on Wednesday, but what do we know about Nvidia as a company? It's actually the same as Micron. There's something very specific with both of these companies. You could actually say two things, but has a moat. So Stuart, that is correct. Both of them do have a moat. I'm actually looking for two other things though. You are 100% correct. My brain is thinking of two other things that we know about due to previous earnings. Leader in their respective sectors, agree 100%, James. Can't make enough chips. Maud, I love it. Sold out for the next 2 quarters of everything they can make. 100%. They both let us know. They will sell out of everything that they make for the next 2 quarters. There's one other thing that's happened to both of them that we were told about previously in both of their last earnings. And if you don't know, let's do a couple question marks. There's no reason for me to sit around, or for you guys to sit around. That's a better way to say it, to sit around and just wonder. Both of them, like Boeing, is now building a backlog with new contracts coming in, God, I can't type, over the quarters worth tens of billions of dollars. They're actually starting to have a backlog like Boeing's had with planes. In my opinion, I've never seen a company other than Boeing that has like 9 years of plane orders backlogged, prepaid for, and are going. It's happened with Micron, and then most recently it's happened with Nvidia. You have billions of dollars of prepaid orders now stacking up, where both of them have said for the next 2 quarters, they're sold out. I wonder if they'll start to get that backlog now of years, which would be rather maybe not smart because technology changes so quickly. What if Micron and Nvidia turn into a Boeing with years of back orders, already having a certain portion of that prepaid? It should be a mathematical calculation for both of these companies that will tell you exactly how much money they make, what their revenue is, what their earnings per share is, and that they'll have a backlog going quarters now, if not years, in advance. Would I get back into Micron? I would not jump back into Micron with shares. They are a little too expensive. And the reason why I would not jump into Micron with shares is because Micron's already at 420 with a PE of 40. But Kevin, we're crying out loud. Nvidia. Nvidia is at 47 with a forward PE of 24. Nvidia is only $191. Nvidia is a $5 trillion company. Well, it was. It's not anymore, right? 4.6. Is it the law of big numbers? Maybe. Maybe it is. But Nvidia is not just chips. It's now GPUs. It's been video cards. It's moving into computers. It seems to have an Apple-like, hey, we're going to create different divisions that create money for us. But Micron's already moved forward. Software, thank you, Stuart. Software too. And yes, NVIDIA's had multiple splits. Someone just said Micron has direct competitors, but so does NVIDIA. NVIDIA has just been a step ahead. Micron has just been a step ahead. Both have direct competitors. Both have run better businesses. I could be wrong. Micron could shoot up even more. I get it. But I would only be in Micron in leaps. Leaps with the short side, giving me plenty of time to see it go higher, because Micron is richly valued. And I'm going to be honest with all of you guys. When it comes to the Mag 7, and let's go the Mag, what, 19 now with all the other ones? People are stupid. Can't calculate values, profits, cash holdings. And if I can say anything to you, and not saying anything against those that thought it was AI, what's the AI disruption that they made so much money and that people are pouring money into AI? Same thing happened with cell phones. Same thing happened with cars. Same thing happened with electric cars. Same thing happened with iPhones, or smartphones would be a better way to say it. Same thing happened to healthcare back in the day. Happened with oil back in the day. Happened with solar power back in the day. And there are some significant signs you can see. The biggest AI disruption will be no more orders, will be a power grid, or some type of government stop because of energy or power. I don't see how AI has stopped yet. And the numbers from earnings say can prove that. Very interesting comment, and this is a very astute comment. Not all AI companies will be profitable. At the start out how the winners will be. Nvidia made picks and shovels, so it has an advantage. I would almost agree with that. And I'm going to write that in here because that is a very astute comment. And I might put that down in my question section that I can't find. So here's my one comment about that. That's the same thing they said about cell phone companies. Not all of them would be profitable. Even BlackBerry was profitable for a time. That's what they said about online entertainment. Can't all be profitable. They can't all work. In fact, we were told at one time that it's going to be Netflix and someone else. And this might be really bad of me to admit. On my phone at the Hurley household, we have the History Channel, Apple TV, Netflix, Paramount Plus, Discovery Go, Prime Video, Disney Plus, Xfinity Stream, Living Scriptures, Peacock, Hulu, Angel, PureFlix, Tubi, Vet TV, HBO Max, and we actually have the chosen. So 17 maybe is what I have. 17 entertainments. At one point in time, all the automobiles wouldn't be profitable. And yes, there have been some that have not and have gone out of business. But it really hasn't been the big ones. If we're looking at all AI companies, I think the worst two, hands down, are Tesla and Amazon. There's just not the profit there. Amazon's AWS. Amazon is the worldwide services, online computing, cloud, huge numbers. And those numbers keep coming down every quarter. So it's going to be interesting. I would not be worrying about things as of yet. Boy, I want to show you guys one more thing. One more thing, I found this really interesting. S&P is down 1, now down 2.5%. Exercised options for Nancy Pelosi. Don't know if you guys have been paying attention to this, but Nancy Pelosi in January acquired 2,000 shares of Broadcom at $80 a share. Boy, it's not here. She also did 50 contracts for 5,000 shares, $1 million of Nvidia. She's with, boy, I can't remember the company. She is with Brad Gershner. What are they in? Brad Gershner. January 2026, she exercised 5,000 shares of Amazon too. Boy, I don't have Brad Gershner's. Should have written it down. Starts with an A, but got it somewhere. Tabs. Gershner, dang it. They're with another big firm that is all in, like 23% of their portfolio is in Nvidia. Don't have it right here, but okay. Let me get through this really quickly. Obviously, all markets are bearish. February will probably end down 5% or more. It's down 2.5% ish as of right now. Earnings pretty toned down except for Wednesday. Salesforce and Nvidia. Biden reports on Thursday. GoDaddy and Hewlett Packard and O. Or sometimes in for the real estate investment. Economic reports pretty tame this week as well. I did not up them completely. They changed a little bit, but a pretty mute week, comparatively speaking. I'm pretty sure durable goods is no longer there on Wednesday. I didn't do a good job of updating that. Very interesting articles. So Supreme Court ruling on tariffs could put the U.S. on hook for 175 billion. Altimeter, thank you, James. Altimeter Capital is Nancy Pelosi's blind investment firm that kind of came up in the last 10 years through her husband. 23% of their total portfolio is Nvidia. Yet she still makes hundreds of millions of dollars somehow each year. I'm not sure how much of this gets refunded. With that said, the first major company wants a refund on tariffs is FedEx. And for the life of me, I'm not sure how FedEx has been a tariff crunch. I don't know what tariff on what product that FedEx is requesting refunds on. So that's something I'm going to be doing a little bit of investigating for myself. I've learned in the past, you don't win against the government. So if you were to ask me, I think half of these companies will request their tariff payments back. I think a lot of them will be like Apple and say, the bygones treat me fairly going into the future. If you're going to sue the federal government, there is an above average chance you will get your butt handed to you, even if you're 100% right. So it's rather, it'll be interesting. There is an accounting tool already out there. If you search who's going to get tariff money back or who got charged with tariff, it came out on Sunday. There is a tool or a website that lists it. I don't know how accurate that would be, but I'm not sure. Something to be paying attention to. Very interesting article on the global tariffs where Trump said, okay, if 10 isn't enough, I'll use a different tariff opportunity that the presidents can use so they can ratchet it up to 15. I was very surprised to see the European Union say, we're going to hold off on our trade deal vote with Trump. To not think he's going to find a way to stop paying NATO or something like that, I'm not sure if this is the guy you pissed off. You've taken advantage and milked the United States for trillions of dollars over the years. It's truly time maybe for the world to start paying their fair share, to pay the correct amounts on NATO, to maybe make the trade balance more fair. All right, a very interesting article for you guys to read on mortgage rates sinking to the lowest in a month. I'm really curious to see if below 6% triggers more refinancing or triggers more home sales. But maybe this is a supply and demand problem, not necessarily a mortgage rate problem. Very interesting article on a chart talking about the next sector that can lead the market higher. I'm going to go through and let you guys read this article. Energy, materials, and staples, which again, I see materials and staples. I don't see energy. If you're going to flood the market with crude, oil, gas, the 6 or 7 different energies that come from crude oils, it's refined. I can't see it, but I'm letting you guys make your own decision. A lot of information here to justify something that I pretty much disagree in. Magnificent Seven, or can they still be useful for this year? And the last article is a very interesting U.S. launches Peace Corps backed tech corps to help export AI and to counter against China. I love that right now we're thinking like someone I spent a lunch with that truly had innovation in their eyes. Something that I think separates us from maybe some of these people that sell companies for hundreds of millions of dollars. Their outlook or what they can see into the future is they look decades out in advance. I find myself at fault at looking out a month, a year, maybe even a couple years. I had a lunch today with someone that sold a huge company, hundreds of millions of dollars. He looks out decades into the future. That's how far out in time he's looking at things to come to pass. With that said, any other questions you guys have that I can answer for you? I apologize for being a little late today. Traffic, and again, I sat through and I listened for hours, talked to this gentleman, just soaking up what makes someone worth hundreds of millions of dollars. Any questions you guys have for me about anything I can answer for you? Brian will be doing next Monday. Next Monday, I will be on a cruise ship. Hopefully all the bad storms are gone from the east. But I'm doing a Bahamas cruise for the first time in my life. First time in my life, I am at the Bahamas on a cruise ship for 9 days. Any other questions you guys have that I can answer? Great question. When do you think the markets will actually move? I think they're moving right now. But here's my thought process here. Dang it, that is not helping. I'm thinking the markets are going to move. I think they're moving now. The question is, we thought they were supposed to. So I think the markets are moving now. My bet, probably have a 6 to 8% drop lower from today before they rebound. I thought we'd have a year a lot like last year. I thought we'd have a year, I thought we could see a 20% drop to a 35% drop. So those markets are moving now. And when they actually move, might be a slow. It might, we might just see, because they have been sideways. Pretty defined channel upwards for the Dow. Predefined channel sideways, but we have our triple top. Seems like we're heading down. If we break that 6,800 level, Expect 6,500 level next. And NASDAQ, if we don't get great earnings with Nvidia, probably heading down to 2190, 21,903. Nathan, does that answer your question there? Or do you want me to answer it a little bit different? Thanks, Jonathan. Lee, I'm glad you're back to hearing us again. Did I lose some audio there? Was I jumbled? I had a bunch of things coming up there, Lee. If I missed you saying my audio is jumbled, I apologize. Nathan, so okay. That's just to make you guys go listen to the recording on myhurleyinvestment.com. MyHurleyInvestment, singular, no S, myhurleyinvestment.com. Hopefully it recorded properly. But okay, guys, appreciate you being here. Look forward to seeing you guys in 2 weeks. Brian will have us next week. And Nathan, I think the markets are already moving. And my expectation is they should continue to move lower by another 6 to 8% from where they are today. That's the short answer there. I think we're going to go and test the 200. Why? Because it's that time of the year. People are going to sell some stocks for profit taking to pay taxes. And it's just kind of that time of the year. And we start making a rebound in April. I was really looking at this year, looking very similar to last year. All right, guys. Hey, appreciate you being with me. I am delaying to see if any other questions come in. If not, Brian next week. I will be again 2 weeks from then. And thanks for joining. Thank you, Stuart. Have a great day. If I could tell you one thing to end this month on, we've kind of had a sell-off. So I don't think we'll see a sell-off on Thursday or Friday. Markets are already sold off quite a bit. A lot of stocks have sold off quite a bit. Probably not going to see the big 2 or 3% sell-off at the end of the month like we normally do. All right, guys, have a good evening. Appreciate being here with me. Look forward to seeing you next week. Until, in 2 weeks. Until then, take care of yourselves, and I'll see you then. Bye-bye.